Welcome to the Capital Market. I'm Edidi Ongewang. Well, we begin the show with a review of the various market trading activities in the current week. Well, sentiment remained bullish in the equities market, but some profit-taking activity trimmed gains, with the all-share index rising by a smaller 0.69% week-on-week to 29,618.57 points. Investors booked profit in the newly listed Boa Cement and Nigerian breweries. However, interest in the market heavyweight Dangote Cement and MTN Nigeria following the positive news surrounding the AGF suspension of the $2 billion tax claim kept the index in positive territory. Investors traded a total of 2.087 billion shares worth 26.470 billion naira in 24,262 deals, and that's in contrast to a higher total turnover of 2.68 billion shares valued at 32.646 billion naira traded last week. Sectoral performance was mixed as the banking index added 2.30% and oil and gas gained 0.57%. On the flip side, industrial goods shaved 6.27%, insurance lost 2.62%, and consumer goods was down 2.15%. Well, analysts at Codros Research expect profit-taking to continue in the coming week, but still see significant legroom for further rally as the higher maturities from fixed income instruments chase other investment windows. Well, moving to the unlisted securities, the trading week ended Friday with the total market capitalization higher at 504.79 billion naira. Investors exchanged 1.26 million units of unlisted securities valued at 162.64 million naira in 36 deals. Trading occurred on 6 out of the 39 securities admitted on the NSE OTC platform. While Treasury bond secondary markets was mixed with a bearish tilt, average yield increased 3 basis points to 10.26%. Sell-offs were seen across the mid and long segments of the curve. The debt office will be holding the first Treasury bonds primary market auction for 2020 on January the 22nd. And to the secondary window, trading in treasuries remained bullish as the average yield across instruments dipped by 10 basis points to 9.67%. Yields in the Nigerian treasury bills declined by 75 basis points to 3.45% as investors covered lost bids from the primary market auction. And for the CBN open market operations, sell-offs drove yields upward by 37 basis points to 13.11%, while analysts do not expect average yield on OMO maturities to significantly par from the level this week, as the financial regulator is likely to mop up maturities in the coming week, which is expected to support secondary market levels. Well, the Minister of Finance, Zainab Ahmed, clarified during the week that the new higher value-added tax of 7.5% will take effect from February the 1st. Well, Channels TV's business editor spoke with the Chief Executive Officer at AfriInvest Securities, Ayodeji Ebo, on the impact of the Finance Act on the stock market and listed companies. Let's take a listen.
The insurance company too, for now, the issue of minimum taxes for life and non-life businesses have also been taken out. That is also very positive for that sector. It means that you can carry your losses forward and you don't have to pay that minimum tax. We overall, especially looking at for mutual funds, for unit trusts have also been exempted from withholding tax. And that would also improve the performance for that. So you are trying to encourage investment. And in terms of the VAT, the list, the exclusion list are also being increased such that it will not also affect the masses. So for me, for us in our view, we feel it's positive for the economy.
For the investment market. We've often talked about how far or distance that exists between the fiscal authorities and the market street, where you are seated, where you are right now. Do you see this finance bill as part of the government's move to get closer to the market street, to get closer to the investors, to the shareholders, companies listed on the stock exchange, the SEC, the NSE and other securities exchanges? Of course, government already have a very warm handshake when it comes to Naira bond issuance and treasury bills. So we have that on one side. But in terms of the equities market itself. Do you think this is raising the curtain, or you think it's deep enough? If we talk about withholding tax, dividend tax, and all those other costs that makes doing business or investing in the Nigerian market a little bit tenuous or discouraging for retail investors in particular?
Yes, I think looking at it from the company. So with SMEs, that has turnover of about, I think it's about 25 million, will be exempted from VAT. So this is encouraging the SMEs in terms of business. And so for the regulators, so what from their own hand, what they will also now need to do is, how can they also provide a platform to attract some of these SMEs to begin to see how they can access capital in the market. So like providing like an SME clinic in terms of getting very close to some of these companies at their development phase as much as possible, so that they are able to understand the benefit of also coming to list in the market. But looking at, on the other hand, looking at for the consumer goods that the company, especially look at the brewery sector, that are just trying to see how they are recovering from the excise duty that has been levied on them. That increase in VAT will also be an additional cost. And as a result, we know in terms of also the consumer pocket is also being challenged currently. So, and the stiff competition within that space. So that may not be positive for that particular sector. But in terms of encouraging investment as much as possible, with the new policy in terms of dividend, that would encourage companies to pay out more dividend, because based on the new act, it means that dividend will no longer be taxed. And for investors, especially those that have the dividend yield perspective in terms of investment, would see that as positive, and we may see more interest in our markets as much as possible.
Definitely, of course, this is a Nigerian environment. I'm sure you know Ayode Jebro, as I know that this is a dividend, cash dividend environment. Retail investors in Nigeria love their cash. I'm sure some institutional investors wouldn't mind having their dividend. If you don't pay dividend in the Nigerian environment, well, there's a little bit of a question mark on why you're not paying dividends. So dividend is very key.
Yeah.
So I'm just looking at the finance minister, Zainab Ahmed, has been putting some tweets out out this morning over the last 1 hour, and she's talking about how the finance bill, which has been signed into law by Mr. President on Monday, would, she says, has recognized the crucial relationship between fiscal policy, the regulatory environment, and the strong capital market we all seek to reflect in Nigeria. It looks like I'm just taking this straight out of the mouth of the finance minister. So she's talking about the relationship, just my last question, my previous question to you, about the strong fiscal policy that we need to have in place that will encourage more listings, rev up the secondary trading on the stock exchange in particular. At this particular point in time. So I put that question to you all over again. Do you see this as that's raising the curtain from the fiscal side?
I think it's positive, and it's exciting to have the fiscal authorities also considering in terms of the participation of how the capital market can help grow the economy. You know, capital market provide long-term funding for businesses, and also in terms of supporting the economy relative to the kind of funding you get from the banks. So if this generates more interest, looking at it from the dividend perspective, and if you see increased dividend and in terms of the yield looks more attractive, then we'll begin to see more interest in terms of investment within that space. And as a result, even for the currently quoted companies, they would also have more that confidence that they can raise capital in this market. And for the SMEs, I know the NSE is also trying to come up with what we call like a growth board, where companies that are just they are coming up can come and list and also access capital. But from that, I would also suggest that from the SEC angle, which is the Securities and Exchange Commission, as well as the NSE angle, they should see how they can further support some of these companies, provide like a clinic, not just trying to get them to just come and list, how they can nurture them even from the development phase as much as possible. And as a result, as they grow, they would see a reason also to come and list, so that we have more companies coming to list on the Nigeria Stock Exchange, and that will also provide some form of in terms of depth to our equities market.
We're talking about the Nigerian Stock Exchange. The exchange will be proceeding to the next phase of its plans to go public, which includes seeking formal approval from authorized dealing members through a special general meeting. Well, the Chief Executive Officer of the NSE, Oscar Onyema, revealed this as part of his broad annual New Year press briefing held in the course of the week.
We've worked on release calendar. We've even automated the process. And all of these are in X-Issuer 2 platform. You know, stay tuned. I think that you'll see improvements in 2020. It's actually been significant work has gone into that. The question about whether in a demutualized context, brokers can become president of the exchange. Let me address the question in this way. With demutualization, the corporate structure of the exchange will actually change. So you will not have presidents anymore. You will have boards of directors and chairmen. And I think that the way the MEMATs have been structured, it does not limit, it does not prescribe any particular category of persons to be chairman of the board. So that's the way the thinking is going right now. Press and investors. Yes, you're key stakeholders, and you will recall that when we were going through the legislation process to get the demutualization bill enacted into law, we had several sessions in Abuja and in Lagos with the press to enlighten them and pass information around what we're doing with regards to demutualization. Now that we've seen the no objection letter, which we just got in December, we're now putting in place final touches to have the court-ordered meeting and the EGM. And in the lead up to that, there will be significant engagement with investors, with the press, with our primary constituents, the brokers and other members of the exchange and the general public. So there's a very robust plan already in place for that, and you'll see that roll out in the lead up to the EGM. Otu Abasi, the question on growth board. The growth board rules have been approved. The structure is in place. We did not launch because we wanted to launch with a listing. We're also looking to continue to improve on that growth board to address questions around how do you help early stage companies come to market, even if it is not in a full public market context. We hope that this year there will be companies that can list on that board, and then we'll launch it with those listings.
We'll take a quick break now. When we return, we'll take a look at the world of blockchain technology and its impact on frontier economies and markets like Nigeria. Please stay with us. Well, thanks for staying with us on the program. Regulators in the securities market have been advised to invite distributors of digital ledger technology to partner and educate them on different financial products and how they function. Well, that's coming from the chairman of the Blockchain Association of Australia, Chami Akimana, who is also the CEO of Convergence, based in Ontario, Canada. Chami was in Lagos, Nigeria this week and had a chat with Channel's business editor, Bosino Mofai.
As far as capital markets, cross-border payments, I think that's a huge application, especially with a continent like Africa, and especially Nigeria, with so many users relying on IT infrastructure and banking services. I think between government and financial services, there's a huge opportunity here.
When you come into a frontier economy such as Nigeria, and you, I'm sure from Canada, whatever you're doing out there, would have looked at our landscape here and see what the local private sector folks are doing. Are you encouraged by what you've seen so far? Where do you see the need for greater learning, more insight, more taking on board of what technology and advances are there out there to boost and increase the pace and the size and the deepening of what they're already achieving on the ground?
Right. So I think there's a huge adoption and interest on the cryptocurrency side of things, which is great. But I think there's a lack of understanding of what the technology could do. So I mean, this is not unique to Nigeria or this region. This is a common problem that we're facing around the world. But if you look at, if you think back to 1995, when one of the most prominent Newsweek reporters predicted that the internet was not going to catch on. That was 1995. Right? Fast forward 14 years, he predicted several things, including government not using government not using the internet, libraries never using CD-ROMs, etc. Children have not even seen a CD-ROM these days, right? So between 1995 to 2020, we've seen a massive uptake of the internet. We don't even talk about what is the technology, we talk about how we do it. If you ask someone what the internet is, how you send an email, we don't often, most people don't know how to explain that. And we're at that stage with blockchain where there's a lot of skepticism, hype. We're still trying to understand what the technology is. And as a layman, it's extremely hard to understand a technological solution, right? So I think we need to put that aside and really start testing out because we're kind of still hell-bent on trying to understand the technology. And if we don't understand it, we feel that we need to put that aside. So I think that's the biggest impediment.
Is it very difficult to understand blockchain technology? Does the common man actually need to understand it? But or is it just necessary for the big business, big governments to understand it, put the technology in place, I just use it?
Yeah, exactly, you're right. Big government needs to understand it. The regulators need to understand it. They need to have a deeper understanding of the technology. But much like the internet, or much like sending an email, why is there an @ sign on an email? The user doesn't know that. We don't even think about that these days. Same with blockchain. We don't really need to understand the technology. We need to trust that the government, the regulators are doing the appropriate things so that would enable us to use the relevant blockchain.
So like sending an email and not writing the usual the text and letters and what have you, what benefit does blockchain bring to me as an ordinary individual just doing bank transactions, paying bills, or want to do business, want to transfer to do business in terms of trade, for example,
right.
Moving goods across borders, Nigeria to Ghana and to Abidjan to Cairo? Well, how does that help?
Sure. I think the biggest use cases will come from government transformation. So if you think of identity being passed down to the user, where we have various identities, if you like, we have no ownership of that data, we have no idea who's controlling that data. I think a form of identity, a form of better financial products would lead to financial inclusion. That we would see a democratization of financial services to everybody. Then we see things like land registry. Land registry has been attributed as one of the single biggest inhibitors to lack of economic growth because people have no idea if they hold a title, if that actually belongs to them or it belongs to someone else, or someone else could come and grab that land.
In this part of the world, in Nigeria, it's a big issue.
Right.
Land registry.
Right. And that is an issue, right? And I think if we don't
And we can apply blockchain?
Absolutely. Absolutely. There are many countries that are leading with land registry. We ourselves have done some work in certain parts of the world. But land registry, I believe, is is one thing government should start looking at. Because that, when you have a level of trust that you own this title, it's a conclusive ownership of your land title, now you can get on with your business. If you don't know where you live, if you live there the next 5 years or next 10 years,
you're not sure.
You're not sure.
Some of what you've done in terms of your profile relates to the securities market.
Sure.
So this conversation is now moving towards the securities market. We talk
Right.
about the financial system, broadly speaking, financial transactions, currency, and what have you. But when we drill down into the securities market, what's the thinking out there? We've seen one global bond for blockchain, which
Right.
was done, I think, last year or about a year
right.
ago. And do you think we're likely going to see more of blockchain in the debt market? Do you think it's right for regulators to be scared in some jurisdiction about blockchain technology, whether they should adopt it, integrate it into the mainstream of the securities market architecture, globally speaking?
Sure. I think the regulators need to have sandboxes. I mean, if you look at the FCA, OSC in Ontario, the SEC, there's many regulators that are actually creating sandboxes. So they invite distributed ledger technology partners to come into their sandbox, show their products, show how these technologies can work so that the regulator understands it better. So the lack of understanding or the lack of education forces the regulator to react. So it becomes a knee-jerk reaction, and which is why we saw a lot of ICOs scamming people. We reacted to something as opposed to really understanding, learning what this technology is. How can we use this better so that we better advise the investors, I mean the capital markets and their customers, if you like. If you are better able to advise them, now you have a much better opportunity at implementing such a technology, because at the end of the day, it will serve the entire ecosystem. So I believe that level of education is absolutely essential from a regulatory perspective. And if we don't see that, that's where we see the knee-jerk reactions.
In terms of using blockchain or the ledger technology here, will it be more on the side of the operators? And how will the shareholders or investors need to understand what the regulators are doing, what the market operators, what the participants, the market professionals, in other words, are also doing, so that they don't get scammed? They understand what everybody's doing, they see the benefits, and they see what restrictions and what regulations, what oversight functions are also there, or rules that need to abide with.
That's right, and I think user beware. But there needs to be a lot of education on this, and this is where I'm seeing, I guess, lack of interest or a lot of skepticism, because when the regulator doesn't play a role in it or is not actively communicating these messages, we see a great opportunity for bad actors to enter the market and scam the average daily user. So I think a broader education needs to occur across the sector, not on what is the technology, but on the actual financial products, what this means. I think there needs to be even if you look Google search on what is blockchain to what do I need to consider in the capital markets? I mean, even if you have a PhD in technology, you're going to be confused, right? So there's no go-to one place, if you like, to really understand what you're getting yourself into.
Well, that's all on the program tonight. Thank you for watching. I'm Edidiong Iwang. Until next time, do have a great weekend.